right, good evening. All right, good evening, everybody. All right, if you can hear my voice, I'd like you to just indicate. Just type one in the comment section if you can hear my voice. All right, just type one in the comment section if you can hear my voice. If you can hear my voice, just type one in the comment section. All right, if you can hear my voice, just type one in the comment section. One, we're in a class, just type one if you can hear my voice. Just type one in the comment section. I want to be sure you're hearing me. So where's the comment section? You can hear my voice, just type one. All right. Kenneth, Ezekiel, in a class, who is in a class, just type one in the comment section if you can hear me. If you can hear me. All right. Okay. All right, Rashidat. Okay. All right. So now, I'm wondering why some people are saying they do not understand what we shared in class and yesterday. Probably because I've not been engaging you to do assignment. In all the previous groups, everybody has assignment every day. You have assignment every day. Okay. But this group, this Chicks in Trade, this is the first time I gave you the assignment the first time yesterday to engage you. It is easy to watch the videos when you're not engaged, but then it requires attention, requires mental activities when you're engaged. When you're required to be engaged, when you have to submit assignment. And it is in the engagement that you get to understand what we're talking about. It is in the engagement you get to understand exactly what we're saying. Because if you don't get it, what is the use of attending a forex class? What is the use of saying you attended Chicks in Trade with Don if you don't get it? So you have to get it. Okay. So and I just want to do a little recap of what we learned yesterday. Then we'll do the assignment. Then we'll give you another assignment. Okay. The fact that many of you did not do assignment is a little bit somehow. Okay. So let's go quickly to what we said yesterday. First of all, if you are using trend line, see, when I started doing the break of structure, when I started doing Dow Jones theory, that was the beginning of price action. You hear me saying that naked trading. So at that point in time, you will not need the moving average anymore. Moving average itself is a complete strategy, especially if you now combine with ADX. If that is all that you want, in fact, you don't need to attend this class anymore. If ADX combined with moving average 10, 50, 200 is very satisfactory to you, you don't want to know anything more. There's no need coming to the class again. That alone is a complete strategy. We're talking about trading professionally, trading like a professional, trading, being able to enter the market at the very beginning. I told you the indicators, the lag or the lead. Two kinds of indicator, the leading indicator, the lagging indicator. But professionally, there is little, in fact, there's no need. And trend line bounce and trend line break of structure, or sorry, trend line breakouts does not need any additional indicator. And that was what was stated from the beginning. You don't need to add anything further, any other indicator to it. It's no more necessary. And that's a concept. That's a concept. That's a concept. Okay? That is a concept. That's what I'm trying to let you understand. Okay? Please give me a moment. Okay, so you don't need in, indicator combined with it, especially the person that was showing me assignment and you still have that moving average cross on it. It is no more necessary. It is no more necessary. You don't need to combine it. But that is not price action trading. The crossing moving average, that is moving average itself is a complete strategy. And it's remarkable to it. It's very productive. It's very profitable strategy on its own. Very profitable strategy on its own. So there's no need to combine it with any other strategy. No need to combine with any other strategy. Okay, so please give me a moment. I'm trying to. Okay. Right, let me share my screen with you. Okay, so we said uh first of all, we say it works on all time frame. Okay, we say it works on all time frame. It works on all time frame, and then it's price driven only. It's price driven. It's price driven only. It works on all currency pairs and all indices. Okay, but there is this part I want to remind you again, because some of you are still making that mistake. Drawing trend line must not break through obstruction. Okay, it must not go through obstruction. Some of you were drawing it and it was breaking through, it was going through obstruction, it was breaking through the candle or through the wick. It must not break through the wick. Then please take note of this other instruction. Drawing trend line that are not touching, that common mistake. The trend lines are not touching, it must be touching, it must touch the peaks, it must touch the peaks, it must touch the peaks. There must be pinpoint connect, pinpoint connect, pinpoint connect, pinpoint connect of your, you know, pinpoint connect of the lines must, there must be pinpoint connect of the two peaks or trough. It must connect, it must perfect, it must be touching, pinpoint touch. There must not be gap between the lines and the peaks or trough. There must not be gap at all. It must touch. Then you now wait in the future to see the third touch or the breakout of it. Keeping already breaked trend line and not drawing a new one, where some of you have not made that kind of mistake. That will be in the future. That will be what to watch out for in the future. So how to draw correct trend lines? How to draw correct trend lines? Identify obvious peaks and trough. Obvious peaks and trough. Identify them. It's very simple. Just check your screen. What can you see? What can you see? What can you see on your screen? It's very simple. Very, very simple. There's nothing complex about it. I wonder why some of you are not getting it. And if you are drawing on your phone, you have to be a little bit patient. You have to be patient with how you are drawing it. Picking those tools and drawing it there. Because when you are submitting an assignment for me, I'm not going to be looking at what you are thinking. I'm going to be looking at what you have drawn. Like I always tell my students, trade what you see, not what you are thinking. It's what you see that you must trade. Many people trade what they think. That's why they lose money. You should trade what you can see on your chart. So you identify obvious peaks and troughs. Obvious peaks and troughs. Make sure that the peak they are looking at it will be easy for everyone else all over the world to look at it, to see it, to pick it, to note it, to identify it. You know, make sure it is so. Make sure it's something everybody can see. It must be glaring. It must be obvious. It must be conspicuous. It must be clear. No ambiguity, nothing hidden. It's clear to every eye to see. You don't need glasses to see. Just see it. Then you now connect two obvious peaks. Just connect two obvious peaks with a line from left to right. Okay? If you are joining the peaks, that means you're having a down trend line. If you are joining the troughs, that means you have an uptrend line. Connect the minimum of two obvious troughs with a line from left to right. This is an upward trend line. Like here now, I've joined this, and I'm expecting it to price to come to this place in the future, and I take my buy. It bounce, then I take my buy. Okay, but over here now, I'm already buying here. It's very beautiful. I'm already buying. Actually, I bought this market. This is USDJPY. It's not long ago. It's about 2 weeks ago. I actually bought this, and this is how I bought it. This is how I bought this market. This is how I traded this market 2 weeks ago. And this is how I traded this market. My trend line was broken here. Then my penny order is run up. And then took it again from here. Entered again. Then I bought it. I traded it like 2 weeks. I came out here. I came out on this market here. I actually traded this particular chart you are seeing on my screen. I actually traded it. USDJPY. I traded it about 2 weeks ago. How I traded it. So now we're explaining, you know, hey, and so and then it worked. When you look at here again, this is obvious. This is my point one. This is very obvious for me. It's obvious. It's obvious. Then this is obvious. Then this is obvious. Or let's say you're looking at the first two obvious. The first two obvious. I'm seeing an obvious peak here, obvious peak here. So I joined the line and extend it into the future. And I discovered that at the third touch, this which is where my attention will be. At this third touch, I'm going to enter in a sell, and I'm having a reversal candle at this spot, which is the bearish engulfing. We're going to get there very soon, which is the bearish engulfing, and then I take my trade. And I'm out of the market. I put my stop loss here, and then enter my trade there. Then allow it to go. So, and allow it to go. At least I'll be coming out of market somewhere around here, because by the time this market is going, I put my stop loss here. This is where I'll be getting out of this market. Okay, and like that it goes. So I don't know why you did not understand it though. I don't know why you did not understand it. But then a lot of you understood it. Some of you that submitted the assignment, I'm actually impressed by your assignment. I'm actually impressed by it, and I'm excited. My goal is that you make money and make your life better, make your family life better. I've been doing this for years. Make your life better, make your family better. I'm not asking you for money in that group. I'm not asking anybody for money. No, that's not the purpose of that class. Especially, my intention was actually to teach young ladies. But in that group now, so many men are there. So that makes it beautiful actually. But the intention of this particular class was for the chicks. I call it chicks in trade. Young, vibrant ladies, whether young or old ladies, that are intelligent, fashionable. If you check the meaning of the word chick, understand my vision for this particular group. and we have 121 people in that group. I doubt if half of you are ladies. I doubt it. But then it's beautiful. It's beautiful. And that's why I'm a little bit patient, trying to repeat it again so that you can get it. See, there is nobody that cannot be a profitable trader. You know, we have ladies who are doing exceptionally well. We have men, of course. Majority of traders are men, but then I always tell students sometimes ago that have when you have you rarely find a lady in trading financial market, but when you have one, they are always exceptional, always exceptional. Always. I have a young lady today at the age of 21. In 2 years of trading, she bought a house and 2 cars with plenty with other landed properties. According to what I heard today, just 2 years of trading. It's possible. It's possible. You know, my first 3 months in 3 months, 3 months. Though the kind of pressure I put on myself then it wasn't easy because I will actually be on the market a day, 18 hours every day. I'm not encourage you to do that actually. I'm not encouraged to do that, but then that is what is possible. And I'm don't let somebody say, okay, if you don't make up, if it doesn't work, then you're not getting it. No. See, I've had students who sorry. Is anybody hearing me now? Please type 2 in the comment section if you can see me, if you can hear me. Please type 2 in the comment section if you can, if you can hear me. Type 2 in the comment section if you can hear me. All right. Who else can hear me? Okay. All right. So we can see. So what I actually want us to do together tonight is to go through the chart together. Let's do back test of 3 month back test on from July, let's say from July 1 of USD. Okay. Let's back test gold and GBP USD together. We're back testing gold and GBP USD together. So let's say this is GBP USD. I said something yesterday. I said the steeper the trend line, the more unreliable it's going to be. If the trend line is steep, it's not going to be sustained for a very long time. It's not going to be sustained. It will break. There's an imminent, trend line breakout when the trend line is steep. You see something like this. You see something like this. It's very steep. Price cannot go like this for a very long time. The price cannot go like this for a very long thing on 4 hours. So what do? I go to 1 hour time frame after drawing on 4 hours. So the candle that closes, this is the candle that is breaking this. So this is the candle that is breaking this now. So my entry will be here. So this will be my entry, and my stop loss will be this last swing. My stop loss will be here. Some people used to put their stop loss here, but I prefer to put it at the last swing. Okay, I try to put my stop loss here. Then so profit will be within the previous swing. This is the previous swing. So the take profit is supposed to be somewhere around here. But then as the price was already going, you trailing your stop loss. You should have come to break even, because the moment price get to this place, you will have brought your stop loss to break even. Now you have a risk-free trade. Then you can decide to walk away from your computer and come, trade your stop loss. One of these days I would how to trail your stop loss. There are different strategies that I use. So you can come in here at the last swing, and if the market takes you out from here, how many pips have you gained? How many pips will that be? This will be 550 pips. 550 pips. Okay, 550 pips. That's profit. 550 pip profit. And then how many pips did you risk? Your risk is 382 pips. Risk is 382. That's your risk. And then what will be your risk to reward ratio? Risk to reward divided by 382. That's 1 to 4. 1 to 4.3. Risk to reward ratio. Your risk to reward ratio. Your risk to reward ratio is 1.1 point ratio. So already don't forget that we're seeing a downtrend. If I were you, I would draw another trend line like this, waiting for breakout. I draw another trend line like this. Now it's broken here again. I'm drawing this one on 1 hour now. Okay, trend line breaks like this again. It breaks like this again. Okay. So trend line breaks like this again. My entry price will be here after the close of that candle. That will be my entry price. And then my stop loss. My stop loss will be here. Then, and of course, if I'm following the swing, maybe price will have taken me out here or somewhere. We close we close the session. If we are in London session, at the end of London session, I usually like to close trade and see if I have an entry again on New York session. If I'm in, I really like to close. If I'm day trading, but if I'm swing trading, I just leave it to run. Okay. All these are trend line breakout. Then you see another trend line breakout here. Okay, another trend line breakout. Okay, now this candle has closed. Now this kind of trade, you're not supposed to take it. This kind of trade, you're not supposed to take it because the stop loss is wide. The stop loss is so wide. It's not advisable you take by the time that candle is closing. By the time that candle is closing, the stop loss is too wide. You're not supposed to take it. Imagine stop loss from here to here. How many pip is that? 656 pip is too wide. Don't take this kind of trade. But if I'm trading it, if I'm on market trading it, usually I'll do it differently. All this one I'm seeing here, all this one I'm seeing here now, there is a way I'm doing it. There's a way I'm going to take it because this will be my reference point. But don't let me talk about that. Let me go ahead with myself. Okay, so I'll be joining. I won't take this trade. It's not advisable. The margin to your last swing is so wide. It's very risky. Don't take it. Just walk away from it. And then you can come in again in the future and enter another buy here and take in some pips. And then enter then you enter another buy like this, taking some pips, then you're good to go. And then we see another trend line breakout here. Okay, trend line breakout. You can see trend line breakout here, 0.1, 0.2, 0.3. I was talking to you about these 3 points yesterday. So you see trend line is broken out. This candle has closed below it. I'm going to enter my sell here at the close of this candle in my favor. I still have some pips in my favor. That's this is good. This is good. It's 189 pips. Which is massive, 199 pips. So I have another trend. This one has broken. This is already far from here now. It's advisable you don't take it. Advisable you don't take it. You know, and when you see that the margin is so wide, it's advisable you don't take it. Now you are most likely you're likely going to lose money if you don't place your stop loss very well. I thought it's supposed to be your last swing. The last swing supposed if here or below here. So you watch the number of people you are risking. If it's more than what you intend to risk, you leave the trade because it's every single time you want to enter a trade, you have to agree in your mind that you are placing a risk. You must place a risk of how much money you are willing to lose, how much money you are willing to lose on that particular trade, how much money you are willing to lose on that particular trade. And that's how to take trade. That's why you areas I'll be joining the buy trend. Those are the areas I'll be joining the buy trends. I'm telling you. And that's what we've been doing on gold for a very long time. We just join it again, join it again, and join it again. Okay, trend line breakouts. Trend line breakout. What that we're looking for is where to join the buy, where to join the buy. That is all that we are looking for. That is all that we are looking for. Okay, this is where we'll be joining all of those trades. Joining all of those trades. Okay, this will be joining those trades to the upside. Joining those trades to the upside. Okay. Many of you don't know this, or many of you don't know this is also this is also a way to trade it. When the double top is broken to this upside, I think I took a trade like this today on which I took a trade like this today on synthetic indices. Okay, it's broken. It's almost the same thing as this one I'm doing, just that this one is horizontal support and resistance. This one is diagonal support and resistance. This is diagonal resistance now. It's broken. Diagonal resistance is broken. This is horizontal resistance is broken. They're the same thing. And it's broken. Horizontal resistance is broken here. It's broken here. You know, I've not touched support and resistance. Don't worry, we'll do it. We'll get there. Okay, so I have it like that, like that, like that, like that. That's how we just be entering every day. It's just giving signal every day. Enter it, and it's very beautiful. It's very beautiful. Okay. So when I see my 3 touch points, 1, 3, price broke to the downside. Okay. Price broke to the downside because already this Already we have a very strong double top here. This one is already telling the price is about to go down. It's about to now it already said it now. I will not be thinking of buying anymore. I will not be thinking of buying anymore. I will just be thinking of sell. I just be thinking of sell. Break to the downside. Okay, break to the downside. That's how it works. That's how trend line works. Let's get to GBP USD. GBP USD. Is anybody still on? Okay. Is everyone hearing me? If you are hearing me, I like just type 3 in comment section. If you can see, if you are still online and you can still hear me, just type 3 in the comment section. Type 3 in the comment section quickly. All right. All right. Um, so I'm looking at GBP USD now. Let's see what happened from 1st of July this year. Okay. Now I'm having 0.1, 0.2. This one is you can see it's a bounce there, supposed to be a bounce there, but it did not work. Even the breakout did not work. Even the breakout did not work. The bounce didn't work, really move much. The breakout, price returns. Okay, price returns. So it happens that way. It happens that way. Just take it like that. I'm not giving you a strategy that will always work all the time, 24 hours. But I tell you a strategy that works most of the time. Most of the time. Most of the time. Not the one that works all the time. There is no strategy that works 100%. There is nothing like that anywhere in the world. Okay, so I'm drawing my trend line. I'm just trying to familiarize you. So we're just like doing filling our workbook as in practical class now. We're just going through it together. Okay, so I have my point 1 point trend line again, draw it this way. Every time it's breaking, I'm entering is broke, and then even if I enter this trade at the tip of here, normally this is where I'll be entering this trade. And then look at it, look at it, look at it, look at it, look at it. This thing actually got to 166 pips, GBP USD, 166 pips. I'm telling you. And then I have something like this too. It broke, but I'm not likely. I don't think I'm going to make much profit. I've broken even. In fact, I will not even trade something like this already at night. This at night. This is like Asian session. I don't trade this kind of time, so I will have missed this because there's no liquidity in the market, no volume in the market at that particular time because of this gap. Now, it's most likely you can see the time. You can see that this is 12 midnight. 11 p.m. at night. Normally, you should not trade GPU going up now. I'll always be looking for opportunities to buy. Opportunities to buy. So if I happen, I'll be shifting my stop loss here. I'll shift it here. I'll shift it here. But 70 pips. And after 70 pips, see what I'm getting again. This is what I'm getting again. I'm getting a breakout of trend line. And I'm entering the price here, I'm entering the market there, and see what I'm getting. I'm getting 182 pips. 182 pips, and then I come in again, I enter a sell again, enter a sell. This is already wide now. You have to trade it meticulously. Then I'm coming in, I'm having how many pips? I'm having close to, even if I stop it here, 120 pips. That, like that, like that, like that. I'm just walking you through. We're just familiarizing ourselves with trend line breakout. Just familiarizing ourselves just familiarizing ourselves with it. So it's beautiful. Okay. So you can see the three touch point, 0.1, 0.2, 0.3, then price broke to the downside, and then like that. You can see how interesting this trading strategy is. Trend line is very powerful. I told trend line is very holy. It does not sin, it does not commit sin, it does not lie. It works, it it works all the time. It works almost all the time. It works most of the time. Most of the time, trend line works. Most of the time, trend line works. It does not lag. It does not deceive you. Okay. Then look at this. Look at this one now. This one is a obedience. This is trend. Price got to that side, and then it came to the. There's something I'm going to be teaching you in the future to sieve out errors because of whether it is a bounce you'll be looking for or it is a breakout to be looking for. Okay, the breakout you'll be looking for, or look at this now, 0.1, 0.2, 0.3. Then price broke to the upside, then it goes up. Okay, then I'm having this also. Okay, price broke to my trend line and then it came down. It broke my. Okay, if I see price breaking this place there, I would have been selling from here. And look at lucky I am. Look at how lucky I am. And then all the way like that, like that, like that, like that, like that, like that. You know, I hope by now you'll have been familiarized. You can see how I'm drawing it. You can see how I'm drawing it. It's not difficult to draw. Just look for obvious troughs. This is a trough. This is another trough. This is another trough. Just join them together. Then when price broke it, after the price at the close of that candle below the trend line, you can enter. Better still, put a pending order some pips below the wick. Put a pen. That's my own strategy. Put a pending order, a sell stop few pips below the candle that broke the trend line and put the stop loss. Now this is trend line breakout and retest because the price broke and came back to retest it and go to fall to sell downwards. This is trend line breakout and retest. And then I have it like that, like that. No ways. It's very amazing. It's very important. It's very effective. It's a very effective strategy. Well, I'm a little bit tired. Just trying. Nicely. You can see trend line breakout and retest. The trend line was broken here. It has a pullback towards the trend line. It continues in the downward direction. Market continues in the downward direction. If you have taken this sell here, you'll have hit 159 pips. You'll have hit five. Market is still selling, so I'll be looking for a sell here. The market is still selling. I'll be looking for a sell here, a sell here. Market is still selling. I'm looking for. I'm still selling here. I'm still selling there. Okay. All right. Are there? Okay. So what I need to do is you will give me. Some of you did not give me pullback and retest. These are some daily assignments. You don't give me pullback and retest. You will do everybody. This time around, everybody must do the assignment. Okay. You will give me all the variations of the trend line. I've shown you pullback and retest to the sell side. I've shown you pullback and retest to the upside. Did I show you to the upside? Pullback and retest to the upside. Show me 10 examples of each of them. 10 examples of each of them. Okay. 10 examples of each of them. Then you let me see how it is the pullback, breakout. But this one now you won't market around that time because that was gap. That was at night. You see? Okay. You see the bounce. This is a bounce now. This is a, then you can extend it into the future and see how it goes. Okay. So and that is that about that. That is that about that. My people, I'm a little bit tired. I need to go. Okay. So that's that for today. I like you to do the assignment again. Every single person. Use your phone. Draw it gently. Draw it gently. It can time to be able to achieve that. Draw it gently. Draw your trend line. Get familiarize yourself with it. Okay, so I want you to use any currency pair of your choice, any instrument of your choice If it is gold, fine. If it's GBP USD, fine. If it is USD JPY, fine. If it is USD CAD, fine. If it's GBP JPY, fine. If it's gold, fine. If it's silver, fine. If it's Nasdaq, fine. If it's USA 30, fine. There is no instrument you cannot use. You just pick your own instrument. Give me all the variations. All the variations of the trend line breakouts, all the variation of it. By variation, this is what I mean. I mean this. By variation, I mean this. Here's what I mean. I mean when you have immediate breakouts. Trend line is broken out, and we have seen a lot of that today. And then you see the breakout and a test. It literally come back to the trend line. Then this one again, you see immediate breakout to the upside, then you see breakout to the upside and comes back to and as a pullback. So give me 10 examples on each of them, and then you choose at least two or three instruments. You analyze on two or three instruments. I'll see you again in class tomorrow. Thank you. And God bless you. Does anybody ask questions? Somebody asked a question here. Sir, should there be any confirmation before entry? I just told you the confirmation now. The candle should close, for breakout, the candle should close below or above the trend line. If it's upper trend line, it should close below. If it's down trend line, it should close above it. Then you can enter immediately the candle closes. But there's a better way I love to enter. I said depending on the few pips above or below the candles that break the trend line, few pips above, because sometimes a candle can break it and then it returns inside. And it moves back inside and continue in the direction of the previous trend. Okay, so you can enter immediately candlestick breaks, must close. Wait for it to close. Okay, especially if you draw a trend line on 4 hours, you can watch it closing on 1 hour or on 15 minutes. Or you enter immediately candle or you put a pending order a few pips above the trend line if you are drawing a downward trend line, a few pips below the wick of the candle, that breaks the trend line, set a sell stop or a buy stop. Okay, is that understood now? Does anybody have any other question? Please type your question if you have questions. Type your question if you have any at the chat box, okay, at the comment section. I'm waiting. I'll give you like 30 seconds to indicate if you have questions. Okay. How to enter trade is my major problem. I watch candlestick to form throughout. When you see what you're looking for, the point is that before you'll have already analyzed all these things before the price get to your trend line. At the moment, the first thing is you've already drawn your trend line. If trend line is what you're using, if trend line is your strategy, you already drawn it. So when price get there, if it bounce, you buy. Or sorry, you enter in that direction. And then if it break out, you sell. But then before it get to that point, you must have calculated how many pips am I risking. And if I'm risking this number of pips, what would be my lot size? I will introduce you to. I don't want to get you through the rigor of calculating it manually. I usually calculator, and the day I will do that, I think I'll be using my phone. I already taught them in the last class. Okay, the calculator is on one of my devices here. The calculator is called. I saw it a moment ago. FOREX calculators. Okay, the one I just deleted one this evening on my phone is called position size calculator. Or you have FOREX calculator. Just go to Play Store, download them. So it will ask you to fill certain forms. What the instrument that you are trading. Okay, like I'm seeing it on my screen here. The instrument you are trading, account currency. If your account is in dollar or in pounds, you put it there. Then if it's in account balance, and what percentage are you risking. Then it tell you what is the stop loss pip. That means from your entry to your stop loss, how many pip is that? If you ask you to insert the pip, then you click calculate it, then it tell you the lot size. That's the lot size you will now come to use to enter your trade when you've already determined the number of pips that you want to take. Already determine the number of pips, you know, or the amount, the percentage of your account that you are risking. Okay, so that's how it works. Probably you have not determined your risk before. See, before trade, eh, before you get to wanting to take any, you already know how much am I risking. Even hours upon hours before trade, your setup is ripe. You have already determined how much am I risking. How much am I risking on this trade? What is my risk? So you already know your risk every single time, even when you are not with your computer, even when you're not with your phone. How much am I risking in my next trade? How much am I risking in my, and you need to tell yourself, look, per trade, I'm not risking more than certain amount of money. You will have known your own psychology. How much can I lose that it will not pay me so much? Period. That's your risk. And our risk is varies from person to person. From my equity, from my account, how much can I lose per once that it will not pay me? That will not pay me. Okay, you'll have determined that. So, and the moment you see your setup, just enter. No panicking. Just enter. You don't have to panic. Just enter the trade immediately. Who else has any other question? Who else has any other question to ask before we call it a day? Okay. All you teach tonight is taking 100%. All right. All right. So who else is asking question? Of questions we like to close the class. Okay. I'm waiting if you have more questions. I'm waiting if you have more questions. But if there are no questions, should we call it a day? Do my assignment though. If you don't do my assignment, if you don't do the assignment, that's why I'm not teaching anything new this night though, because many of you did not do the assignment. And some people did not understand. That's why I'm just repeating, I'm just reiterating what we shared yesterday. Okay, so do the assignment. I want you to learn. I want you to grow. What I'm teaching you, there's no. I doubt if you will see any person in this country that will teach you for free. I doubt it. I doubt it. I didn't learn what I'm teaching you for free. I didn't learn it for free. No, I didn't. So you need to reciprocate, because that's the danger of teaching something for free. So when you teach it for free, people don't really give it value. Okay. From February this year, I've been doing free training from February, especially offline. This is like my third class online. I've been doing almost every weekend. I've been training in the year 2025, almost every weekend, physical classes. I've been training. I've been training physical classes, and so. But then I already. I'm going to stop that. Okay, I'm going to stop that very soon, because I want people to be serious. Just get serious. Don't say because that it is free does not mean it is cheap. It's not cheap. Like today, I've been awake since 6 a.m. and I'm not even closed my eyes. I've been studying. I've been trading actually. I've been trading. I've been working. I've been trading. So take it seriously. You may not have this kind of opportunity again. Okay, especially for free. You may not have it again. Okay, so all right. Thank you. I'm going to see you again in class tomorrow. All right. God bless you.